You have to look at the whole picture in Europe, and what we've seen this year is a much better preparation for this winter compared to last year. So we have full storages. We've hit the target of 90% already. We've had an increase in the growth of regas capacity in Europe, and Uniper built the Wilhelmshaven regas facility in record time, 10 months. So we've built a more robust preparation for the winter, and also we've seen some demand destruction, 15% compared to last year. So I think we've done everything we can to prepare for this winter, and I think that means we're confident that we will be able to maintain supplies. However, there are risks on the horizon. If there are disruptions to indigenous supply in Europe, if there are cold temperatures, bear in mind we had a very warm winter last year, so that was very helpful and means that the storage is full. So if we have a cold winter, disruptions to indigenous supply, or indeed more LNG demand in China, then that could push up prices. And I think I wouldn't like to speculate on price levels. What I would say is we're living in a more volatile price environment. So a small change, a small new piece of information can move the price very, very rapidly. That's the challenge we're facing.
There's very little margin for error. In other words, it's a very tightly supplied market. But we've seen how Europe has diversified the energy options. Similar story going on in terms of the new approvals of LNG facilities in North America. But how long is it going to take for that new supply to come onto the market and address some of the shorter-term demand challenges?
Yeah, well, I think you're absolutely right. There is significant new supply coming forward in LNG, and we are going to see a big increase around about 26. Up until then, we will have challenges. But as I said, most important for us is to ensure that we have the right infrastructure so we can import more volumes into Europe, and the regas capacity is growing very rapidly. We'll see a very significant additional capacity over the coming 12 months. That means we can import spot cargoes and we can bring the LNG to Europe when the price is right. It doesn't necessarily protect you from price spikes, but it does protect you from physical shortages, and that's really important for our customers, and it's really important for European industry.
And the severity of the weather is such a wild card.
Indeed.
But do you believe, I mean, we're in a very different paradigm compared to where we were in Europe in terms of the energy security supply situation last year, but do you believe that inventory levels at 90% will see Europe through the winter, even if it is a punishing one?
As I said, I think we have the potential to get through it. I think it would require cold temperatures plus a couple of other negative factors like increased Chinese demand, or indeed interruptions to indigenous supply, UK continental shelf, Norway, etc. That would be the perfect storm. So I think we are much more resilient than we were last year. Nonetheless, it is a risk, and there is a risk in a cold temperature environment of volatile prices and higher prices.
And from an energy security point of view, Michael, how de-risked and how diversified are Europe's energy options now?
Well, there's no doubt about it. It is a challenge, but as you said, we are seeing more and more LNG coming onto the market, lots of US projects, Qatari projects. That will help Europe's security of supply and will help diversify our gas supply. That's over the sort of mid-term. If you look longer term, of course, Europe's aspiration is to get to net zero. It's to reduce dependence on fossil fuels and imported gas, and we do see gas demand falling beyond the mid-2030s in Europe as we electrify more of the economy, as we electrify heating, and as we move to green gases like green ammonia and green hydrogen. So as the European targets are fulfilled, we will see automatically a more diverse energy supply across Europe.